From Forex Traders Daily, this is your daily analysis with Ross Mullins, live from Richmond, Virginia.
Hello everyone, this is today's video analysis for October 27, 2017. Today we're going to be taking a look at the USDJPY, the US dollar, versus the Japanese yen for today's trade analysis. It's important to note in just a few minutes from recording of this video that we will get the advanced GDP data out of the US. May change some of the stuff that we're talking about right now. So you want to make note of that and see how the market responds to that news. Anyway, we have been studying the different trends within the range that this pair has been in for 2017. You can see the blue box here on the chart, big blue box, all the way from January of this year. Several different trends. The black trend lines, 1, 2, 3, 4, 5 trends, and then the blue trend line, the 5th or 6th trend within the pattern or the range that we've seen since 2017. We are currently in the uptrend pattern, the blue trend line. So the question is, are we looking at the top of the trend for a breakout and continuation, or are we looking for resistance and reversal? And that's what we're trying to determine now, of course, here for the dollar yen. Looking back in time, look at the green and the blue circle. The last two times the market challenged the green shaded area, 114.2550, it reversed and went back down to the bottom of the range. Let's zoom it in a little bit, and you can see there's the green and blue circle left from the green shaded area. Where did it reverse to go down? That's it. Why is that important? That's where we are right now. We're right there at the 114.2550 level. So the question, again, is, are we looking for resistance and reversal, or are we looking for breakout? That's what we're looking for, basically, from the green shaded area. Zoom it in one more time. And so from the green zone, there's two potential outcomes. One, it bounces off of it. We get evidence of reversal, with shooting star candlestick or inverted hammer or a bearish engulfing candle or some sort of structure like a head and shoulders pattern. One of those things may be the clue that we're looking for this to turn around and go back down. The other thing that we could see, and of course it's a possibility, is that it breaks above it and goes higher. If we get some good positive GDP data out of the U.S., I think we are likely to see the break of 114.50 and a continuation higher. If it's negative, significantly negative from the forecast, we may see a little bit of a bump lower. So again, the trend is what we're going to focus in on. If you're buying anything, typically you want to buy it at a lower price. So obviously over the past few days, really the past 5 days, the best place to buy this would have been down here at 113.35, the orange shaded area. All you have to do is look at the last 5 days. Not really right now. Risk reward is not balanced in your favor buying underneath what has historically been a resistance at the green shaded area. Let's take it down to the 4-hour time frame. So now that we've seen that on the daily, we know that there's been price action. Again, the best place to go long and buy would have been as close as possible to the orange shaded area. At least today, we are sitting above the yellow zone, 113.9070. So we're looking at that as our intraday support at the yellow shaded area. So either it finds support here, continues to challenge the green zone, breaks the green zone and goes higher, or it reverses from the green zone, breaks underneath the yellow zone, and we look for another challenge or lower underneath the orange shaded area. If it breaks the orange zone and the blue trend line, of course, I think all of this is looking for reversal to go back down. And so GDP may be the catalyst that this currency pair needs to break out of this little 5-day range that we've been in between the green, yellow, and orange zone. So watching for resistance or reversal. Again, bearish engulfing candle, shooting star candlestick, something here that tells us that there's been this infusion of sell orders from the green shaded area. And I don't think there's enough here to tell us there's an infusion of sell orders. And we also don't have confidence yet that it's broken above the 114.2550 level. Obviously, it hasn't done that since getting underneath it. And again, we go back to those circles back here where it was. Since getting underneath it all the way back here in March, it has not been above that green shaded area. So that's going to be the clue that we need that is going to continue to go higher. So what I typically look for is a candle body that breaks out, opens and closes above the green zone to increase my confidence that it's going to continue to go higher. Otherwise, we look for a sudden infusion of sell orders to be the clue that it's going to reverse for the US yen today.
From Forex Traders Daily, this has been your daily analysis with Ross Mullins. If you would like to get Ross's analysis on all the currency pairs he's watching and all the trades he takes today, join him in his live trade room by clicking on the link below. Please leave any comments you have about today's video in the comments section below.